we end up getting an overall variance of 6.64. Standard deviation, as we know, is measured at square root of variance. That is square root of 6.64, which amounts to 2.576. Measures of relationship. Measures of relationship. Covariance. Covariance is the measure of joint variability of two variables. It measures the direction of the relationship between the variables. It determines if one variable will cause the other to alter in the same way. Covariance between variable x and y can be computed as summation over the product of xi minus x bar and yi minus y bar the whole divided by n minus 1. Here x bar and y bar are the mean of x and y respectively. The value of covariance can range from minus infinity to a plus infinity. Correlation. Correlation is normalized covariance. It measures the strength of association between two variables. The most common measure for correlation is the Pearson correlation coefficient. Correlation between two variables, x and y, can be measured with respect to covariance as covariance between x and y divided by the standard deviation of x and standard deviation of y. The value of correlation ranges from a -1 to +1. Types of correlation. Correlation can be either a positive correlation, zero correlation, or a negative correlation. The first picture over here represents a perfect positive correlation, wherein a straight line with a positive slope is representing the relationship between the two variables. Zero correlation means that the line representing the relationship between the two variables is horizontal to the x-axis. Perfect negative correlation can be represented by a straight line with a negative slope. Correlation equals to 1 implies a positive relationship. That is when one variable increases, the other variable also increases. A correlation value of -1 implies a negative relationship. That is when one variable increases, the other decreases. The correlation coefficient of 0 shows that the variables are completely independent of each other. Let's consider an example. Here, we have two variables, height and weight. To compute the correlation between height and weight, we use the correlation formula as covariance of x and y divided by standard deviation of x and standard deviation of y. Here height is the x variable and weight is the y variable. First, to compute covariance, we compute the x minus x bar and y minus y bar values, and then the product of them. We then compute x minus x bar square and y minus y bar square values to compute the standard deviations of height and weight respectively. Correlation, as we know, has been defined as covariance of x and I and y divided by standard deviations of x and y. This can also be represented as summation over x minus x bar multiplied to y minus y bar divided by square root of summation over sum of squared deviations. That is x minus x bar square multiplied to square root of summation over y minus y bar whole square. That is sum of square deviations for y. Now, let's find out values to put into this formula. First, we find out the overall sum of height to get the mean of height, which is 5.14. Similarly, we get the sum of weight to get the mean of weight as 50. We now get the summation over x minus x bar multiplied to y minus y bar to get the numerator for the formula. Then we compute x minus
All right. A very good evening to each one of you present over here. I know it's been a long day. This is the third live streaming session of today. We have it every day from Monday till Friday. So, right now it is 5 p.m. Indian Standard Time, 3:30 p.m. Dubai Standard Time. It's evening in Dubai, in India. It's afternoon in Dubai. I hope you all are having a great day. The markets have closed. We have so much to discuss, and uh, this being the third live streaming session, it's more to do with enhancing your trading knowledge, right? Technical trading knowledge. So I'll give you 5 minutes, right? Right now it's 5 o'clock Indian Standard Time, 3:30 Dubai Standard Time. I will see you after 5 minutes. So get your pen, paper, water, coffee, tea, whatever is required, right? Keep you concentrated and to keep you focused. So, all right, guys, I'll see you in 5 minutes. Okay?
most likely to get 5 heads and 5 tails. Same logic can be discussed if we talk about another example of rolling a die. So there are 6 possible outcomes when you roll a die. 1, 2, 3, 4, 5, 6. And each of these has a probability of 1 by 6 of occurring. So we can say that the expectation is going to be 1 multiplied by the probability of that happening, which is going to be 1 by 6, plus 2 by 6, plus 3 by 6, plus 4 by 6, plus 5 by 6, plus 6 by 6, and that is going to give us 3.5 as an output. The expected value is 3.5. So if you think about it, 3.5 is halfway between the possible values that I can take. And this is what we should have expected. Next, we talk about the concept of variance. So variance of a random variable allows us to know something about the spread of the possible values of the variable. So for a discrete random variable x, the variances of x is going to be denoted by using a simple formula that is going to be var x equals ex minus m, the whole square where m is basically the expected value of the expectation of x. So this is more like a standard deviation of x, which can also be represented by using this formula. So the variance does not behave in the same way as expectation when we multiply and add constants to random variables. So now there are 2 different types of variance that we can have a fair understanding on. First of all, we have low variance, and then we have high variance. So low variance simply means that there is a small variation in the production of the target function, with changes in the trading data set, and at the same time, high variance, as we can see here. High variance shows a large variation in prediction of the target function, with changes in the trading data set. So a model that shows high variance learns a lot and performs well with the trading data set, and it does not generalize well with the unseen data set. And that's why, as a result, such a model gives good results with training data set, but shows high error rates on the test data set. And since the high variance a model learns too much from the data set, it leads to an overfitting of the model. So model with high variance will be having a couple of issues, like it may lead to overfitting, or it may also lead to increase in model complexities. Next, we have skewness. So skewness in simple terms is basically a measure of asymmetry of a distribution. So distribution is asymmetrical when it's left, and right sides are not the mirror images. Right now, this is a mirrored image, and a distribution can have right positive, or we can say negative, or it can have 0 skewness. So right viewed in this scenario.
All right. I hope everyone is present in this live webinar, live streaming session. I can see Sophia over here. Sophia is here. When Sophia is here, there's nothing for me to fear, correct? All right. So, a very, very, very good evening to each and every one of you over here. Right now, it's 5 Indian Standard Time and it's 3:37 Dubai Standard Time, right? It's hit evening in India. Right now, it's afternoon over here. And the Indian share market, the Indian stock market has been concluded for today, Monday, right? So a lot of things have been happening and a couple of things to discuss, as well as since it is the third session, we are going to talk more about the technical trading strategies, and we'll delve into it later. But let me begin. My name is Harsh. I've been having 8 years of experience in the financial markets, mainly focused on forex, commodities, right, such as gold, crude oil, platinum, palladium, silver, and US indices, right, like the S&P 500, the Dow Jones 30, the Nasdaq 100. And right now, currently, since the last couple of weeks, we have been diving deep into the Indian stock market, right? The indices, the Nifty and the Sensex, as well as individual stocks on the Indian share market, right? So I hope everyone is ready with their pen, paper, water bottle, coffee, tea, whatever is required. Remember, this being the third session of today, generally people are a little fagged out, right? They are tired because the day is concluded. People have been busy, people have been working, people have been traveling, people have been busy in different parts of their lives, correct? So I don't want to make it dull. I just want to make sure that everyone is up in their spirits, right? Make sure these live trading sessions are a medium for me to provide you with vital information that will be beneficial for you. Remember, here at Dolphin Markets, it is so important for me to get this information out to you beautiful people, that we provide you with analysis, we provide you with hot stocks, trading opportunities, right? Stock opportunities that have potential to escalate, as well as we provide you with technical trading information, right? I'm the one who specializes mostly in technical trading, so I'm the right one to provide you with that kind of information. Now, let's get started with how the day started and how the day concluded, right? Let's quickly look at what the markets have shown. The Nifty and the BSE, right? As we had discussed previously also, the markets had gapped up, indicating there was positiveness, right, in the market. The markets had gapped up with the positive sentiment that yes, the bears have been exhausted. The bears are diminishing. The bearish power is diminishing. But towards the end of the day, the prices have concluded at a bearish sentiment, right? So the entire movement of today's candle with a range of 1%, but the market has closed at 0.71 negative percent. All right. So there has been a couple of factors leading to this kind of behavior in the market, and that is mainly pertaining to the 425 stocks out there, 425 companies, right, who are anticipating their financial data to be to be put into the eyes of public, right, to be put forward into the eyes of public this entire week, right from 21st, right, 21st is done, so 22nd, 23rd, 24th, 25th, all the way till Friday. Huge company, I mean 425, it is not at all a small number, right? So a large number of companies are ready, are anticipating, right, to showcase, to post their financial data, right, for the end of Q2 results. So there has been a lot of anticipation, there has been a lot of pessimism, there has been a lot of indecision, correct? So based on these factors, the markets have taken a bearish sentiment for today's close. Let me put on a small piece of information for you so we can quickly go and understand what has been towards the market sentiment, correct? So let me shift it, let me make it smaller. I hope everyone can see my screen. Perfect. So Monday, as investors continue to book profit at higher levels amid the ongoing quarterly two earnings, despite a near 3% surge in HDFC. We're going to talk about HDFC also. A 3% surge in a bank is comparatively, it is significant. So, but still, with even having the backup of this particular stock, and remember, HDFC is a huge player, right? Is a huge market player in the Nifty and the BSE, the Sensex. But it's still both the indices, the Nifty and the Sensex, has closed in negative territory today. The BSE Sensex moved in a band of 959 points during the day before closing at 81,151, while the Nifty 2 ended in negative at 24,781 with a loss of 73 points or 0.29% negative. HDFC, Asian Paints, Reliance Industries, Maruti Suzuki Tech M, they were up in a range of 0.4 to 2.6. Remember, it's a little less significant compared, but nonetheless, they still failed to lift the frontline indices as losses in Kotak. So look at these two. We're going to look a little bit into HDFC also. We got HDFC Bank. Remember, Boda Bank, both of them are banks, right? And the other one we're going to talk about is Kotak Bank, right? Both of them being banks, when one has spearheaded at positive 3%. All right. Welcome, Mr. Lee. Welcome to the live webinar. It's so lovely to always see you with your emojis. It puts a smile on my face, right? So, anyways, coming back to HDFC Bank. Remember, it's given a percentage spike of around 3% right here. 3%. I hope you can see my mouse. 3% surge in HDFC Bank. While at the same time, Kotak Mahindra has taken a pretty nasty fall. It's not mentioned in terms of percentage, but we will look at the chart of Kotak Bank to see how, when a company is putting out its financial quarterly earnings right in front of the public, and what its speculation, what people expected the company to do, to what the company has actually done in terms of its, quarterly earning reports. I mean, when they do not go in tandem, when they do not resonate with each other, this is when you have massive setbacks for companies. We are going to look into the two stocks, but let us continue for now. So the border indices, the BSE mid cap, the BSE small cap knows losses too. Remember, if the big brothers, the Nifty and the Sensex, are commanding the direction or commanding the sentiment for a particular day, generally the BSE mid cap, the BSE small cap, the companies that are, they don't come under the blue chip companies, they come under the small mid chip to small chip company. So they too have been following the footsteps, and they have a negative percent of 1.6. Among the sector, the Nifty Media Index declined 2.8%, the Nifty Realty declined at 1.7, while the Nifty IT, the information technology sector, declined at 1.5%, and the Nifty Private Bank declined at 1.3. So it's been more of a bearish sentiment for even the Nifty and its sister Nifty indices, right? Nifty Media, Nifty IT, Nifty Reality, and Reality and the real estate sector, right? And Nifty Private Banking. Now, looking at these two banks, remember, with HDFC spearheading a 3% growth, all right, 3% increment in terms. Let's go to HDFC. HDFC Bank. HDFC Bank, as you can see, a triple. Look at the gap, my God. Ladies and gentlemen, I mean, this bank is volatile. Looking at, and it's known, right? Let's look at it from a helicopter view. We have region Writing, waiting for today's strategy, Mr. Lee. For your kind information, the Indian share market has closed, so there is no strategy. We are going to talk more about the information pertaining to technical trading. All right. So in terms of all right, today's strategy, yes, I get it, but you are not going to find any hot stocks. All right. And Sophia, you are good. Thank you so much, Sophia, for your kind words. Such kind words help me, and they make me more optimistic. They make me feel good. They make me proud that yes, I'm able to utilize my skills, utilize my methodologies to make it sound interesting and more convincing to beautiful people like you. So a gap of almost right from Friday's close to a gap up of around 1.94, almost touching 2%. Now that is a massive shooter, and this is due to the quarterly results that have been coming out. At the same time, a bank like HDFC, when the quarterly earnings match with the performance of the company, the speculated results match with the results that have been showcased to the public, right? The quarterly earnings. I'm talking about the quarterly earnings. You get these massive push spikes, correct, in price. While at the same time, if you're looking at Kotak, right? I just showed you I had written Mahindra, which had appreciated by almost 3%. 3%, it's a huge deal, right? On the other side, we have Kotak, okay, Kotak Mahindra Bank. Please understand, both of them are coming from the same sector, the banking sector. But look at the vast differences, when the quarterly earnings do not match with the performance of the company, right? The speculations had different numbers, but in reality, the real numbers, right? The numbers which are produced after the quarterly earnings, when they are established, when they are published, and when they do not resonate with what was said to what is said, you have these massive drawdown. So on one hand, you had HDFC, correct? Let us go quickly to the chart of HDFC. It had an appreciation of almost positive 3%. Oops, positive 3%. Okay, yeah, positive 3%. All right, price has rallied positive 3%. While at the same time, when you're looking at another bank, remember Kotak, HDFC, both are prominent banks in India. These banks are well known, they are well marketed, they are well scattered all over India. People are aware. When you talk about banks, people know when you talk about Kotak Bank, when you talk about HDFC Bank, right? But when the financial data, earning reports, and all these financial data, when they match with the performance of the company, you have spikes which come out like this. And when they do not, in as such in the case of Kotak, right? When the financial data do not coincide with reality, right? With what has been published in their quarterly earnings, you have a fall. And uh, let uh, let me inform you, the fall, right? It gapped with a percentage with a deficit of 1.18. All right, 1.18. It gapped down for today's day, and it moved almost for negative 4.3. I would round it up to negative 4.5. So on one hand, you have a trade such as a stock such as this one HDFC, which has appreciated by 3%. At the same time, you have a bank which has depreciated by 4.5%. So look at it, the markets, the banks from the same sector, big institutional banks, right, prominent banks, but when their management or the results based in terms of quarterly earnings don't resonate, such things happen. All right, so coming back to the title of what was mentioned for today, HDFC, Asian Paints, Reliance, they have appreciated in value all the way from 0.4 to 3%. But since they hold a small minority compared to the index, right? Majority of the index, when I'm looking at the heat map, I'm pretty much sure you all are aware by now that we use the heat map to get a gist, to get an idea, to get an approximate understanding of what the particular index is doing. So when we type, for example, we are going to type the Nifty 50. So all the 50 companies which are listed in Nifty are mentioned over here, depending upon the color. Darker the color, the more intense the movement. Green stands for bullish, red stands for bearish, correct? So darker the green color, the more bullish intensity it has. The darker the red color, the more bearish intensity it has. The ones in gray denote that they are around the mark, the neutral mark. So they haven't been appreciating, they haven't been depreciating for today, correct? So looking at HDFC Bank, as I had mentioned, around 2.7, almost a 3% increment in price. While on the opposite side, as you can see, my mouse is being covered a little bit, but if I zoom out a little bit, no problem. But you get the point. I'm talking about Kotak. So HDFC has been at 2.79% appreciation, while Kotak Bank, right? Let me open Kotak Bank. Kotak Bank has been at a deficit of 4.37, right? Heavily red. It's maroon. It's been tanking, right? Because of the quarterly earning results. The mismatch of what people had assumed, people had speculated to what the current result that was published today, which did not resonate, right? It did not go hand in hand. And that is why you had such a strong downfall. Now, coming since the market is closed and we have had a good amount of discussion in terms of what the market has done, how the market has opened, reacted to consumer sentiment with all the 425 companies, not just 425, more than 425 companies out there to list out their financial data, to list out their quarterly earnings. So there's going to be a lot of skepticism and a lot of uncertainty. You saw a clear example in front of me with Kotak Bank and HDFC Bank, right? HDFC Bank appreciated by 3% today, right? And Kotak Bank depreciated by negative 4.5, right? So, Sophia writes, you are good. You are so passionate. Thank you, Sophia. Your kind words make me push myself to give you better content, to make it more interactive, to make it more energetic and more lively, because I want people to learn and be a part of this live streaming session, not just be a student and only listen. Because nothing happens with listening unless and until you don't talk about it, you don't share your ideas, you don't show visuals, you don't make it interesting, people will forget it, or people might not take interest. Now, coming to today, I would want to discuss, since it's the third live streaming session for today, we are going to focus more on technical trading, right? My forte, my field of specialization that I mainly specialize in. So let us talk about it. We are going to talk about technical trading strategies, and let's begin. So what is technical trading analysis, right? Technical analysis is a method of evaluating statistical trends in trading activities. It typically involves price movement and volume. It is used to identify trading and investment opportunities. Unlike fundamental analysis, which attempts to evaluate a security's value based on financial information such as sales, earnings, technical analysis focuses on price and volume. Remember, as I mentioned, we just don't use number crunching. Number crunching is mainly focused on the fundamental aspect. When it comes to technicals, we use charts, all right? And based on these charts, we try to speculate, not predict, but speculate future price movement. Mr. Lee, I love your manner. Thank you so much. I hope I'm providing right justice in terms of making sure I'm able to, provide valuable information to all you beautiful people out there. Some important key points to take away. Technical analysis is used to evaluate price trends and patterns and thereby identify potential investment and trading opportunity. There are people who follow fundamentals, right? They read balance sheets, they read quarterly earning reports, they read whatever is necessary, right? The bank statements, the financial statement, everything required, and then based on the numbers, they analyze, they try to come to a conclusion as to how well the company is doing, how well a stock is doing, or how well a stock is not doing. But when it comes to technical analysis, we basically use charting software, right? And charting software will be used to evaluate price trends and therefore identify potential investment and trading opportunities. Sophia asks, will this PPT be sent to us? Um, if I'm not sure whether I can send this PPT to you, but if you do want, I will take enough time on each PowerPoint so that you can take a screenshot and you can keep it as a reference. Because I'm not sure how well YouTube's live streaming session allows me to share PowerPoints, but nonetheless, I will take significant amount of time, so I will keep it and then you can take a screenshot of it. I only read the K line. All right. So people, so what Sophia is mentioning about K line is basically candlesticks, right? We are going to talk more about candlesticks. Don't worry about it. Candlesticks play a vital role when it comes to technical analysis, right? Don't worry, we will get into it. K line is just another term used by Asians, especially Chinese, because it's called as Kaishan. Kaishan is the, if I may be wrong, but sorry if I'm not pronouncing it right, but Kaishan or Kaishan can refers to, is the Chinese word for candlestick, right? So we people in English call it as candlesticks, and they have their own term used in Chinese, right? So technical analysis may be contrasted with fundamental analysis, which focuses on a company's financials rather than historical price patterns, right? Number crunching done by fundamentalists, while historical price patterns and pattern recognitions are done by technicalists. All right. Now, coming to various types of technical indicators. So there are many types of technical indicators. All right, some of them being basic, some of them being mid-level, and some of them being advanced. So today we are going to focus on the basic technical analysis. All right, every Monday when we begin, we want to make sure that as many people as possible can start just with the basics so that they can get a quick grasp of what technical analysis is all about. Remember, technical analysis is such a vast topic that it kind of gets a little tricky to condense it, into like providing you in an hour of this kind of an interaction, right, during our live streaming sessions. But nonetheless, I will do my best to make sure that I can provide you as much of information and condense it and provide you in the right manner. All right. So starting with the basic technical analysis. All right. I hope you are all ready. If you are ready, do comment down. Say yes, we are ready, Harsh. Remember, like I always say, if Harsh is here, there is nothing to fear, right? Let's start with trends, right? The basic concept when we talk about technical analysis always boils down to trends, correct? Now, what do you mean by trends? Trends in simple terms means what? Trends in simple terms means whether price is going in a particular direction, whether it goes in an uptrend, which is basically a bull move, right? As you can see the cursor, a bull move, right? That is called as an uptrend, or a bear move, which would be a downtrend or side. The market can only move in three directions. Either the market can move in an upward fashion, called as an uptrend or a bull trend. Price can move in sideways. We'll come to it one by one. All right. So this is an uptrend when prices are appreciating in value, when prices are traveling in a linear manner but towards the positive incline. Trends, correct? Correct, Mr. Lee. Trends. Or when price is moving in the downtrend, right? So downtrend. Unlike uptrend where prices are moving up, downtrend is where prices are moving down. Mr. Lee writes, move in a certain direction. That is exactly correct, Mr. Lee. Trends, movement of price, direction of price movement is called trend. All right. So uptrend, then we have downtrend, right? When prices are moving linearly in a downward fashion, where prices are depreciating, prices are falling down. Then we have sideways. There are certain movements of price where prices are not appreciating, prices are not depreciating, prices are just stagnant or within a range. And such kind of market movements or such kind of trends are called sideways trends. All right. So there are three types of trends: uptrend, downtrend, and sideways, correct? Now, similar to an uptrend, the difference between an uptrend and the difference between a channel. Now, people would be like, Harsh, oh, this is a channel. Don't get confused. A trend is represented by a line. You can see clearly, I have mentioned something called as a trend line. Now, when a trend line is duplicated, or cloned, whatever, basically when I duplicate a trend line and I place it onto the opposite side, it becomes a channel. If you look at it again, this is just a trend line. A single line is called as a trend line, but when you duplicate that trend line and shift it to the opposite side of the trend line, so now instead of one trend line, you will have two trend lines, and those two trend lines are basically called as channel. I hope it's easy, right? It's easy to understand. So trend line is one line, a channel basically comprises of two lines. So if you look at the example of this uptrend, right, it's a single line indicating that price is going up. When you look at the channel, it is exactly the same, but as mentioned, you have a trend line and then you have a line on the opposite side of that trend line. So it creates a channel, correct? And you can clearly see that price is playing between those channels. Similarly to an uptrend channel, you have something called as a downtrend. Very similar, right, to a downtrend, uh, a down trend line or a bear trend line. We have something called as a downtrend channel or a bear channel. Different people use different names, but in terms of its meaning, it remains the same. All right. A downtrend trend line duplicated onto the opposite side creates a downtrend channel. And as had mentioned about sideways movement, now you have a sideways channel, right? Sideways channel and sideways trend line, they kind of resonate together, right? Two trend lines going sideways and price is just between the two. So we talked about trend lines and we talked about channels, correct? Now we talk about breakouts. Remember, the prices cannot keep holding trend lines. Trend lines are artificial lines drawn by people like us where we expect price to go in a particular direction, right? Once the price holds the trend line, we call that the trend line is being respected, right? That's the term we use. The trend line is holding. The trend line is respecting the market swings. The moment price breaks out, as you can see my mouse, the circle indicates the place where the price took out the trend line, right? The trend line had been holding, right? The trend line had been holding, respecting. Price had been respecting the trend line, but the moment price closes out, the market sentiment shifts. Now, for this particular example, it was a bear trend line, right? A downward trend line. But the moment when price closed, broke the trend line and closed beyond, that is the time when the sentiment has shifted from bearish trend line to bullish, right? So there has been a shift of sentiment from bearishness to bullishness, and that is what we call as breakout. There are a completely different category of traders out there in the world who trade purely based on breakouts. Trend lines that are taken out, people generally have a conscience. People have what do you call, a habit of entering on breakout, because that signifies that the price is shifting, right? From one particular direction, it is shifting to the next direction. From bearishness, from bear move direction, it's shifting to bull direction, bullish movement, correct? So when price breaks out, the term used is called as a breakout. Breakout is when price closes and takes out the previous trend. Similarly, we have this is a bearish trend breakout. Then we have something called as a bullish trend breakout. Remember, don't get confused. Bearish trend breakout is when the trend is bearish and the breakout happens to the opposite side, which is the bull side. While a bull trend breakout, it's when the bull trend or the bullish channel. Remember, we use these terms interchangeably because they dictate or they showcase the same structure. Whether I use a trend line or I use a channel, the depiction of price moving in that direction remains the same always. So for this particular example, I'm using a channel. So when once the bullish channel gets taken out and creates a breakout, right? So that has that showcases traders, technical traders like me, and eventually you too, that the movement of price from the bullish character it had been having for quite a couple of for that particular time period has now shifted to bearish, has now shifted to the opposite side. So the uptrend has now been taken out. The trend that has been holding the price movement to the upside has been taken out by a candle closing below the trend line or below the bull channel. And that is when we call it as a bull trend breakout. Once price breaks out and closes below, we expect now the prices to continue in the opposite direction. That is, for this particular scenario, from bull direction, it has eventually flipped and now it wants to go down, indicating a bearish direction, correct? And then, so these are basically the basic terms, the fundamental basics of technical trading. Technical trading relies on price movement, relies on chart formations, candlestick formations, candle patterns, but the basic structure remains on price movement in three directions: uptrend, downtrend, and sideways. So based on these trend movements, we segregate, either we use trend lines or we use channels to dictate the movement of price. And when we have breakouts, that is when many people are interested, and it has good profitability percentages also. So this is something that we should be keeping in mind. Now we have formations. Now formations, we have very basic formations such as support, resistance. I mean, it has already been discussed so vastly during the live trading sessions that some people might find it very easy, but while some people who are still learning, remember, we are not here to just teach one or two people. We are here to teach the entire community as a whole, right? Everyone here at Dolphin Market wants to make sure that our customers are getting the best buck for their value, right? The best value for the buck. Sorry, the opposite way. So we just want to make sure that we are providing you with the right set of information, correct? So it is important that we keep everyone included into the group, right? We just don't want to focus on one, two people who don't know anything or just one, two people who know everything. We want to make sure that everyone has their questions clarified, everyone is understanding what is being said. If any doubt or any question that arises in anyone's mind, please make sure you can go to the chat box and type out your question so that I would be aware and then I can get back to you. All right. So coming back to basic, right? We call them as formations. All right, formations. So the basic form of formation are support and resistance, right? As you can see in the chart, this is a zigzag line, a typical trend movement, right? When the zigzag when it's called as a zigzag line, all right, just let us call it a zigzag line. So when the zigzag line is positive appreciation, it is a bull swing. When the price is, when it's negative, it's a bear swing, all right? It's as easy to understand. So there are certain points on charts that people mark where people understand that why did price come to a particular level and start reversing from that particular. There has to be some sort of significance that price has come to a particular level, holds that particular level, and then travels in the opposite direction. So this is a very typical example or illustration of technical analysis. Technical analysis relies on historical data. If something has happened in the past, we expect it to repeat in the future again, right? So as you can see my mouse, when you're looking at this support, right, there is a reason why price came over here before it started. Why couldn't price continue down? There has to be some reason. So the next time price comes, there is tendency for people to take into consideration and tell to themselves, to generate opinions in terms of, since price held that point in the past, in history, it should hold again in the future. And that is what eventually happens. Price comes to that same area. Remember, it's an area. It can never be a single horizontal line, correct? It's an area. Price, bounces and see how high it goes, correct? So these uh, areas of interest from where price react, right? From where price reacts, creates a low and creates another high. It's simple to understand as a floor and a ceiling. Everyone lives in a house, right? So a house has four walls, right? Minimum four walls. I mean, there is no house out there who doesn't have four walls, correct? So the floor signifies support. You're standing onto it. It is meant to hold you. That is what it shows in terms of price. It holds price, right? It bounces, right? And on the contrary side, we have a term used as resistance. Resistance is just the opposite of support. Like how you have a floor on which people stand, there is a ceiling right on top of us where you have the light bulbs, the fans, and all the other kind of equipment. So a floor represents support where price holds. On the opposite side, you have a ceiling, which is also termed as resistance, which doesn't allow price to go on top. So it remains the definition remains the same, but it is contradictory. You get it? One holds price by creating support, one resists price by creating resistance. So, and again, like I said, technical analysis, it depends entirely on past data repeating itself in the future. So once price reacted from this particular area and fell down, people expected that once it comes around that area, we expect price to again repeat what it had repeated in the past. We again want prices to reverse from those kind of areas. So these areas are called as support and resistance. I hope you all are understanding. If there are any questions, please do write down in the chat box, in the comment box, and I will do my best to clarify your doubts. Now, do you think that if a support is formed, it will hold indefinitely? Never. Remember, the markets are dynamic, the markets are changing. They might hold it once, they might hold it twice, they might not hold it, but eventually they are going to be taken out at some point or the other, right? If a support had to hold for indefinite amount of time, the prices would be just sitting horizontally, correct? So that doesn't happen in the real world, correct? So when you have such areas where a previous resistance or a previous support had been holding but eventually gets taken out, right? We call them as breakouts. It is very similar to the same concept that we had discussed earlier, where whether we have a trend or we have a channel, the moment it breaks out, we call them as breakout trades, right? So similarly, when a support or a resistance gets taken out, we call it as a support resistance breakout. For this particular example, we had a resistance from where prices fell. People, again, based on technical analysis or mindset or typical trader psychology, would would have their opinions or would be decisive to take shots around this area. But unfortunately, prices manipulated and closed higher. So what had to hold as a resistance has now flipped into a support. So a resistance becomes into a support and vice versa, right? So we call these areas as breakout. The moment the resistance is taken out, the sentiment from bearishness flips to bullishness as per this current example. All right. Similarly to that, we have something called as squeeze and breakout. It is very, very similar to what we had discussed in terms of channel, right? I mean, if you compare a channel to a squeeze and breakout, they remain the same. Let me show you the example of the channel again so people can understand more clearly. It's the exact same um, structure, right? It's a downtrend channel. The only difference between a channel and a squeeze and breakout. All right. So I hope you can understand this is a channel, a downtrend channel, and now we are talking about a squeeze and breakout. So for a squeeze and breakout, basically what happens is the channel, rather than being parallel to each other, they start to constrict. They start to come closer. So it starts to squeeze. Remember how if you have a balloon and you want to let the air gush out, you have to squeeze the balloon. Similarly, the lines are squeezing price to come closer. Remember, the lines are just depictions, correct, of price that we draw. It is price that eventually the lines are used as a visual, a visual demarcation for to show how prices are constricting. All right. So channels are parallel, exactly parallel to each other. Whereas for this particular example, it's not parallel, but it's squeezing. So it's coming closer. It's coming closer. And once the breakout takes place, the sentiment shifts, right? For this particular example, it's a bearish squeeze and breakout, while you have the opposite, which would be the bullish squeeze and breakout. So the moment the price closes outside the channel, closes outside the squeeze, that's when the consumer sentiment, the trader sentiment shifts from bearishness to bullishness for this particular example, and vice versa. If you had to look for a bull squeeze and breakout, the squeeze would be towards the bullish phase, the bullish swing phase, and the breakout would take place, and then prices would be bearish. Now we have something else called as double tops and bottoms. I hope many of you have been aware of these terminologies used a lot, especially if you go to TradingView and look for trade ideas. A lot of people talk about double tops and double bottoms, right? So double tops and double bottoms are basically structures. A double top is a clear representation of a price point creating two tops, right? So once price came over here, it reacted. A double top is very similar to take it's very similar to a resistance, right? Price came to a particular level, fell down, and price came again to the same level and again held it, right? So it's more like a resistance, right? But the thing with double tops and double bottoms are we consider a neckline, right? This is again a visual depiction of price. It's nothing but to create a clear, it's like two mountains, right? So we have two mountains and we have the base of the mountain. The base of the mountain people refer to as neckline, right? Sophia is telling take careful notes. Yes, Sophia, very important because this is of vital information. Yes, you have tons of information out there on Google and on various websites, but the way things are explained, right? Like I said, I love to be visual. I like to have all these drawings so that it's easier to understand, correct? So double top basically means you have two tops, like they look like two mountain tops, and the base of the mountain top, you can see the black line, correct? That acts as a neckline. The moment price closes below that, that is when people consider double tops to be what you call to be initiated, right? To have formed. Remember, double tops happen only once you have two tops and the price closes below the neckline. That indicates that once price closes below the neckline, we want to go with the flow of the movement. So here prices have closed below, so we expect bullish behavior. So we want to take a trade on the closure. It is very similar to a breakout trade, but it depends on the chart formation. And in this particular scenario, it is a double top. We expect prices. See the reason I have drawn these two arrows, right? I hope you can see these two arrows. The reason I have drawn these two arrows is to denote that the distance from the double top to the neckline, people generally portray their targets to be the same. Exactly. Both these lines, both these arrow marks are identical, exactly the same side. And that is generally the consensus where if price creates a double top and we expect prices to continue down, for this example, our target will be to the base of this arrow mark. So somewhere around here, right? Similarly to double tops, we have double bottoms. The concept remains exactly the same, but it is flipped. Rather than having two mountain tops, you're having two valleys, right? Exactly the same structure. The moment price closes outside by creating a breakout above the neckline, from the base of the price, from the base of the double bottoms to the neckline is this arrow, right? Demarcated. This arrow is then duplicated to create an additional arrow on top from the neckline, and that is where people have a consensus towards where we should start closing, where we can look for targets, right? So double tops and double bottoms, correct? Now with double tops and double bottoms, there are two peaks or two valleys, correct? Now we're going to talk about head and shoulder, right? So this people confuse head and shoulders with the head and shoulder shampoo, right? I mean, head and shoulder shampoos that's so widely used all across the globe. So people think about head and shoulders shampoo. But what we are talking about here, it's about the head and shoulder pattern. So like a human being, we have one head and we have two shoulders, correct? So we have one head and we have two shoulders. So it basically denotes a human being, right? So one head and two shoulders. So a pattern where we have a shoulder and the head. Remember, the head is the bigger peak and shoulders are the minor peaks, right? Smaller than the head. This is a typical, it's like similar to double tops and double bottoms. We people call it as triple tops and triple bottom. But head and shoulder is when the head is significantly bigger than the shoulders, correct? Your head can never be the size of your shoulder, correct? It has to be bigger than the shoulders, right? Higher or lower, depending upon the formation of this particular structure. So a head and shoulder pattern is similar where we draw a trend line, a neckline, right? You can see the pink color line that I'm showing you right now. It is considered to be the neckline. The moment price closes below the neckline, the distance from the neckline to the head, right? Sorry for not denoting it in this example, but you can see my mouse. So from the head to the base of the neckline, the base of the pink line would be exactly the same distance that we would duplicate and put below this neckline to have an area of interest where we would be wanting to close our trades, take profit. So this is a depiction of a head and shoulder pattern. All right. Similar to a head and shoulder pattern, we have many and various other forms of head and shoulder pattern. We have a standard head and shoulder pattern that I have depicted to you in this example, as well as we have inverted head and shoulder patterns, right? So, and not all patterns are going to be exactly or identically same, right? Remember, the markets are ever changing. The markets are dynamic, so they're going to keep having different shapes and different sizes. But ultimately, the underlying concept always remains the same, right? Two shoulders which are smaller in size and a head which is comparatively larger. So I hope this gives you a good amount of understanding in terms of what a head and shoulder pattern is, correct? Besides the head and shoulder pattern, we have so many patterns. We have continuation patterns. If the trend is bullish and there has been some kind of consolidation or sideways movement and price continues up, it is called as continuation. While vice versa, if price has been bullish, starts to consolidate or move sideways and then reverses, it's called as reversal patterns, correct? So some of the continuation patterns are shown on your screen below. Remember, these are just patterns, right? We will get deeper into these at maybe a later stage or when we have more time. But because the third session is constricted to 1 hour, I'm just trying to make sure that I'm giving you a clear gist about what things are, right? What are the main basic patterns? What are the candlestick patterns? What are the chart patterns? And so on and so forth. Similarly to a head and shoulder pattern, we have a double top, triple top. These are reversal patterns. Unlike the previous slide that I've shown you, prices continue in the desired direction, right? If the swing was bullish, the prices continue bullish, and vice versa. If the swing is bearish, the price continues bearish. While for reversal patterns, if the price is bullish, the price reverses, right, from bullish to bearish or from bearish to bullish, correct? These are some of the other examples, right, for reversal patterns. This is an example of a bullish formation, right? As you can see, bullish pattern, continuation pattern. Price was bullish, it consolidated or went sideways for some time and then it continued its direction. Now there are types of entries, entries in terms of similar to the bullish and continuation patterns and reversal patterns. So this continuation breakout is where the trend is dominant. For example, in this particular scenario, the trend is bearish and the price consolidates sideways but eventually continues lower. Correct? So this has been a continuation pattern, right? A bearish breakout. Whereas when we are talked about reversal, continuation patterns and reversal patterns, here you can see the swing has been bearish. The prices have started to consolidate sideways, eventually closing out and reversing the trend, right? So these are reversal patterns, right? In this case, it's a reversal breakout. Then, as we had discussed about breakout, when prices are continuing, when prices are holding a trend line and price breaks above, we call them as breakout trades, right? So it is like this is more of a practical explanation to the structures that we had shown before. So entry is on retest. Once the price breaks, we do want to enter at the breakout or on the retest of the trend line. So here are some more examples, and I do get it. We are running short of time, but I definitely hope that we have covered quite a lot. We still have a couple of pros and cons, with technical trading being so vast and expansive, it really gets hard to just condense all the data for you and to, give it out to you. So no problem. We will take time. We will make sure that, most of the points are covered. And like I said, we are here 5 days a week. I am having these live streaming sessions for almost 3 times each day, ranging from Monday to Friday. So I'm here, it's not one webinar which I would be doing and then I'm gone. It's going to be a regular affair, right, between us. So just make sure to keep tuned, keep attending all these live webinars. It's for your benefit and it will pay you off. All right. So giving you a quick recap as to what the market had done. The market had opened bullish but had closed on a bearish sentiment based on the excitement or the indecisive or the nervousness of the quarterly earnings coming out of more than 425 companies. So we had a bearish sentiment. There had been the company we discussed about the two big banking companies such as Kotak and HDFC. Kotak resonated with its quarterly earnings and gave strong outputs, right, in terms of price appreciating by 4%, while HDFC had given up positive results based on their quarterly earnings, while Kotak, on the other hand, had a depreciation of almost 4.5% when when the quarterly earnings could not match with what they had predicted it to be. So these are certain things where even being in the same sector, not necessarily all the companies in a particular sector have to outperform, right? It all depends on how the quarterly earnings or the reports are being let out. And then we did talk a lot about technical trading, right? The basics. We talked about support, we talked about resistance, we talked about trend lines, we talked about channels, we talked about squeeze, we talked about breakouts. So, and we talked about head and shoulders, right? Not the sharp, I'm talking about the chart formation. Head and shoulders, double tops, triple tops. We talked about continuation patterns where the dominant trend is, for example, bullish, the price consolidates sideways and then continues higher, or a reversal pattern where, if, for example, the price is bullish, the price consolidates sideways and then reverses. So there are many chart patterns within these two pattern recognitions itself in terms of continuation patterns and reversal patterns. So there's so much to discuss, but because we are short of time, I just wanted to cut it till here just to not overburden you. I know it is 6 o'clock in India and 4:30 in Dubai. So I know people are like tired, they want to go out, they're done for the day, they want to just go back home, spend time with their family, friends, girlfriends, boyfriends, husbands, wife. So I take this opportunity to make sure that everyone has got some sort of information. I hope today's session has been of importance. People have learned something, at least if not nothing. And I hope you all have a great evening, right? I mean, the day is done, but the night is remaining, right? Raat baki abhi. So I hope everyone has a great evening. Have a great time, and I will see you tomorrow, right, for the first live streaming session. Till next time, take care. All right, peace out. Bye.